Why is Toronto and Vancouver's market dropping while Calgary is still going strong? Interest rates are going crazy. Should you get a fixed or variable? There are more new listings coming and buyers are thinking, should I wait or buy? Sellers are questioning, if I get an unconditional offer, does that mean they are actually buying cash? And investors are asking, can I still get cash flow even with the big rises in price? We're going to share why Calgary's market is still strong, plus all this and more coming right up in our June Calgary real estate market update.
What is behind Calgary's strong real estate market while the rest of Canada is slowing down? Well, just like real estate anywhere else in the world, it really comes down to a few fundamental reasons: economy, affordability, and migration.
Economy. After 7 long years since the oil crash in 2014, it is finally boom times again in Alberta. So oil is over $100 a barrel, and since 25% of our GDP comes from oil and gas, we are finally coming out of a rut. Industrial and commercial real estate is booming. So in the industrial space, big players like Amazon setting up a 600 square foot fulfillment center in Balzac, and Home Depot, Canadian Tire, and Walmart all have invested billions in Alberta. To give you some context, the cost per square foot for industrial space in Calgary is nearly half the price compared to Vancouver and Toronto. By the way, if you're someone you know is looking for this type of space, let us know because we have connections at JLL and Colliers. Commercial real estate. Did you know that Calgary has more office space per capita than any other country? Calgary office lease rates is $16 per square foot compared to $39 in Vancouver and $28 in Toronto. So it makes it super attractive for companies to set up their head shop here. What we know is when there's more money being poured into an area, it becomes more desirable and in more demand, and values for real estate goes up.
Affordability. Now, the average benchmark price in Vancouver is $1.14 million. Toronto is $1.21 million. The average benchmark price in Calgary is $648,500. So what is that? That's 1.2 minus 8, carry the 1. That's about a $560,000 difference. Why buy one house in Toronto when you can buy two very good homes in Calgary? One for your primary residence and one as an income property. By the way, talking to our investors, that is one of the biggest reasons why they are buying Calgary real estate versus Ontario or in Vancouver, because the price of acquisition is reasonable and you can still cash flow. If you want to be completely hands-off and you're looking for a joint venture partner, feel free to reach out to us in the link below.
Migration. So almost 17,000 newcomers came to Alberta in the third quarter of 2021, which is the most in 7 years. If investment begins and current oil companies start hiring again, we will see an influx of people. Okay, let's talk about interest rates and our advice for buyers, sellers, and investors, and then we'll go through the statistics for Calgary real estate.
Interest rates. Okay, so it's no secret that interest rates are going the opposite direction of crypto. Now, historically, variable rates have saved you the most interest, but that's not why you should choose a variable rate mortgage. Instead, you have to think about what the risk tolerance is. At the end of the day, you can't predict where rates are going and where they're going to be. So because you have no control of the rates, what you can control are your payments, and it is a conscious decision. So as an example, if you're deciding between a fixed or variable rate mortgage, what you should do is get your mortgage broker to run a few different scenarios based on what happens if the interest rate goes up 0.5% and then another 0.5%. Maybe do it for about 1.5% increase. Now you have to take a look at that and compare that to your monthly budget. Would you have the finances to make those payments? And more importantly, would you lose sleep over that? If the answer is no, then the answer is very obvious. Go with a variable rate mortgage. It's not about where you think rates are going to go. It's do you have the budget for those higher payments, because chances are the Bank of Canada will keep increasing rates. And two, will you lose sleep at night? So make sure you look at those. I'm going to leave a link in the corner up top. I go through more in detail what you should consider and the details of whether or not to choose between a fixed rate mortgage and or a variable rate mortgage.
Advice for buyers. We are getting this quite often from buyers. I'm noticing there are more listings coming on the market. Should I buy now or wait? The answer is simple. If you see a property that hits most or all of your requirements, then buy it. Truth is, we don't know where the real estate market is going or what conditions we will be facing in the short term. Although there aren't as many multiple offers happening now, it is still happening, so there is no guarantee that you will get the next property you like. Plus, it's unlikely that you are the only buyer interested in that property. Sorry if that seems pessimistic, it's not my rule or Felix's rule, it's just how it is. Speaking of multiple offers, we are not competing with 10 plus offers on a property like before. It's more like 5 if it's a hot property. And FYI guys, we have access to off-market properties, so you're more than welcome to leverage our team and our connections because you won't have to compete on a property like if it was on the open market. Feel free to reach out to us so we can see if it's the right fit. But don't forget, you guys, the bottom line is this. We are clearly still in a seller's market for all property types, even apartments.
Advice for sellers. So as a seller, if you receive an unconditional offer, does that mean that the buyer is literally paying all cash? The answer is no. What they've done is they've ensured that they have all the paperwork with their mortgage broker, and the broker has given them the confidence in their ability to get financing. So the buyers are really taking a risk by not including it as a condition on the offer. Most of the times, they're still getting financing. We are seeing sellers reducing their price more often now than before, but prices are still higher than the same time last year. And we're gonna go through the statistics in a minute. Sellers are still testing the market, but not at the same level as before, and offer prices, they're just not as high. Lower priced properties though still have lots of showings. It does feel like there is less urgency in the market, there's less unconditional offers, and most deals are going pending versus sold within the first few days, meaning less offers without conditions on those deals. Now, make sure you price your property at market value and let the market determine if it's worth more. Don't be greedy, guys.
Advice for investors. It is tough to find properties with basement suites. Illegal basement suites for under $600,000 without having to put work in it. Yes, you can still find cash flow, but you need to be on it. What we are finding is it's tougher sourcing out things that are trending, such as matte black fixtures, and because they're in shortage, or you are paying a lot for it. Good properties will sell quick, so you need to snipe it ASAP.
Sales. Overall sales are up 3% this month, year over year. Now, detached and semi-detached were slightly slower, at -15 and -4 respectively. However, townhouses and apartments were on a tear at 33 and 66%. Even though detached and semi-detached sales were slower, prices still continued to go up in both markets.
Pricing. Overall, pricing is up 14.5% year over year. The benchmark price is higher for all property types. Detached is 17% higher to $648,500. Semi-detached is 15% higher to $584,700. Row and townhome housing is 17% higher to $363,300. And apartments are 9% higher to $275,300. Inventory and new listings. Inventory is down 23% and new listings is down 6%. Months of supply. It is 1.69. If months of supply is less than 2.5 months, then it is a seller's market. So it's clear that the market is favoring sellers.
We hope you guys enjoyed this video. Hopefully it will guide you towards making better real estate decisions, and it gives all of you guys watching from outside of Calgary an idea of what the Calgary real estate market is doing. If you found this video helpful, we would love your support if you hit the like button, and feel free to subscribe if you want more mortgage and real estate content like this. And if you want to see some home tours, check out our playlist here. My name is Felix Chan.
And I'm Zach Schultz.
We are with the LiveInnerCity real estate team, helping you keep real estate simple, and we'll see you in a few seconds.